Hello, this is Mike Swanson, and the odds are you're watching this video because you got an email alert from me telling you that I'm going live. Uh, it's April the 15th, approximately 3 p.m. In a few moments, more people will come in here as they get the email. So I'll probably give them a little bit of time here. But we're in a fascinating situation right now, and this market is moving quickly. Actually, so I can't really wait for more and more people to get the email. I'm doing the video instantly. So I'm going to do a trade today in my Robinhood account, and then we're going to talk about what's going on in the markets. But if we look at the markets themselves, let me load up the screen, and we'll look at the headline, and then we're going to flip to my Robinhood account. Um, so here's the market action today, and a lot of tremendous excitement. The Nasdaq is up, S&P is up, the Dow is up, and the Russell's up just a little bit. And this headline tells you that there was blowout economic data, strong bank earnings. We got the start earnings season yesterday. Banks are making money. All the earnings comparisons are with a year ago when the economic shutdown first began and was most intense. But now we're a year later, and the economic data showed that there was a big bump in consumer spending in March, partially thanks to all the stimulus checks people started to get. And while some people went to the store and used that money to buy things, others have been depositing it in their brokerage accounts, even in their Robinhood accounts, and buying stocks, helping the market to go higher. But that's what's driving everyone's attention. And Coinbase debuted this week. We've seen recent rallies in crypto. But what's happening today, what no one is talking about, can't make any of the headlines, is what's happening in the metals market because they're coming completely alive. Copper up 2.5%, platinum up 1.93%, palladium 2.4, silver 1.75, gold 1.74. Every one of these metals listed up more than the NASDAQ. And I expect from here to the end of the year, that's going to be the story. These metals, I believe, are starting to rally now after gold and silver has been consolidating since August. Today, they're clearing some critical resistance levels. The GDX has busted through the 35 resistance level. Gold is above 1750. I don't think anyone really notices this because people like to see higher and higher prices, and the higher something goes, then the more and more people are drawn into it. That's the lesson of Bitcoin over the past year. Now, when I go on my personal Facebook page and see people where I live, they're buying Bitcoin and talking about that, but and they're not talking about gold and silver. But gold and silver go up enough, and they will, and others will too. So I like to get in early. That's why I buy this in metals and gold and not Bitcoin at this moment in time. Other reasons, I like to buy stocks that pay dividends and invest in the long haul in things I believe in. Crypto doesn't pay a dividend. I really have zero interest in it. It doesn't mean you can't make money in it. If you are, good for you. It's an instrument of speculation. We'll talk about that more in a few minutes. But this market's now moving so quickly today that I want to make a trade to adjust my own account to the situation and weigh myself a little bit more to the action in the metals markets. So I typically have 10 positions in this Robinhood account, divide the account evenly into 10 positions as a way to manage position size risk. If you're all in one position, you put yourself at high risk if that position were to go down. And almost every stock does eventually go down. So you don't want to do that. Spread out. In my main large account with a large amount of money in it, I've got over 125 individual stocks that I own. In this one, I got 10 because that way I can talk with you about 10 stocks. I can't talk with you about 135. It'd be too overwhelming, but we can talk about 10. So I want to sell a stock to buy, move into another position that I like. So how do I make that decision? What should I sell? Well, I do it typically a simple way. I look for the one that has gone down so I can realize a loss and shift a losing position into a potential money making position. I like to roll money out of lagging positions and into new ones, do that periodically. So that's essentially what I'm doing. And the stock that I'm actually down on, most I'm up on, some very nicely since I started these 10 positions about 4 or 6 weeks ago. But the one I'm down the most on hasn't worked. Most of the 10 have, but I'm not batting 100. EURN, I'm going to liquidate that stock right now. This is real. This is not make believe. This is not paper trading. This is not someone randomly spitting tips at you for the sake of spitting tips or giving you tips. This is real trades. Big difference between that and what you see in most other places. So let's uh, sell all, and they got to log me in to do this. Did it instant, boom! I got $415. So how much money do I have in cash? 417.14. Now, in the email, I said I was going to buy SLV. SLV is an ETF that tracks the price of silver. There's another one, the second ETF though, that I'm actually going to buy that I think is better. And I'll tell you why I think it's better. But SLV is more popular. That's why I put it in the email. Well, I changed my mind as soon as I sent the email out. So if you're watching the video, you're ahead of it. Then I'll have to edit the blog post too. But I'm going to buy a different ETF. It does the same thing, but it's PSLV. A little bit less volume, about a third average less volume. You can see the charts is identical, but SLV pays a management fee of about 0.5% a year. That's what they charge. While PSLV charges 0.4%. So it's a little cheaper, the management fee, and that's why I'm buying this ETF. And let's do that right now. So you can see what Euronav has done today, but you can see what my account has done today. We're up 2%. We're beating the S&P 500. We're beating the Dow. We're beating the NASDAQ today. And I believe by buying PSLV, we will be able to say that more frequently in the future on a daily basis. So we got $417.14 of buying power, and that gives us the ability to buy about 45 shares. Um, this stock is not support on Robinhood. Wow. Whew, that's crazy. Wow. Talk about the limitations of Robinhood. I own PSLV in my main account, and I add on to the position today. Wow. Wow. I mean, this is why, Robinhood's useful to talk with you about. Um, I have the account to see what others are doing on here, not to do what they're doing, but to find out what they're doing. That's why I like the top 100 list. And it is an easy thing to use. Uh, many people are opening up Robinhood accounts to trade for the first time, but man, does it have massive limitations. Incredible. I don't understand why this stock is not supported. Oh, that's why. Fractional shares are currently positioned. I don't know. I don't. There's really no reason for that. Well, I guess I will buy SLV. That's totally crazy. Um, wow. I mean, okay. We'll buy SLV then. We're going to get about 17 shares. I'm just going to put the dollars in. Order purchased instantly. That's the illusion of Robinhood. It's so easy to click these buttons, right? And they don't overwhelm you with charts data. They just show you these line charts without any indicators. With they default to daily information to keep your brain focused on the short term. When the real reason I'm buying SLV now is because this is a pretty easy setup where you can put a stop loss at 22, and SLV silver is outperforming the price of gold, and I think is likely to continue to do that this year. Inside the Robinhood account, I own WPM, PAS, FNV, which is doing great. I think this is the best performing position in the account. All these were bought in March. KGC. Those are the mining associated positions that I own. It's hard for me to navigate and flip windows because you don't see what I see, but okay, crap. I want to show you all the positions. So we mentioned most of them. CXP, that's a REIT, and they got a buyout offer that helped it surge. We bought this in March, around 1450, somewhere 1450 and 15, and it's taken off. The REIT sector has been rallying strong, but this also got a buyout order, something that also does not happen if you own a crypto coin. You don't ever see some company say, I'm going to buy all the crypto coins. But if a company out there wants to buy out another company, they got to buy all the shares or make a bid. So companies made a bid. ROWR is an ETF that I do own that tracks the REIT sector, which I'm bullish on. O's, another stock I own, which is a REIT. LTC's a REIT. And own some shipping stocks. Let's see which ones. DHT, STNG, DHT and SNG, which I think they've come down. I think STNG is performing better. Yeah, it is. So anyway, these are the 10 positions I got. So what have we done? We've shifted money out of a losing position to take advantage of what's starting to develop, I believe, in the silver and gold complex. My favorite indication of what happens in this sector is the performance of mining stocks relative to the price of gold. It tends to be a leading indicator. GDX is the gold stock ETF. It's cleared 35 today. If we drew a trend line connecting all the highs, we've broken the trend line today. And if gold just attacks the August high, GDX is going to probably do the same and go beyond it. So that's where I think this is heading for over this summer. I think GDX is going to get back up to 44, 45, maybe go beyond that, because silver is likely to make a new 52-week high in such an environment. But my favorite indicator is the GDX divided by gold ratio, and it's breaking out today. It's gone sideways from December to now, clearing the January high. But that sideways action, while the gold price was weak, said that gold price was just a consolidation, just a correction, because this was trending sideways. If this was truly a bear market, or that dip weakness in gold was the start of something that was going to last, this ratio would have gone down, would be making lower lows, lower highs in a downtrend itself. But it wasn't. It was sideways. And now it's turning up. And that, to me, what you see here is the buy indicator. This ratio going through the January high, a basic sideways consolidation. All that said, most people are still asleep on gold, not paying attention, lost interest, because they're seeing other things recently going up faster than gold's been going up. such as Bitcoin. And that's what draws attention. So it's probably going to take now gold going through 1800 before the little investor, the typical Robinhood person, starts to get any interest and want to get involved, because they need to see higher prices, and start chasing. They don't buy into consolidations. They don't buy into dips, uh, hardly at all. So if we look at the top 100 list, let's see what's happening. Tesla's number one at the top. Sundial Growers, um, Amazon, GameStop. GameStop was in the top five when it sucked so many people in because they chased it, right at the top when it made all the news. And all those people that chased at the top, they're down like over 50%. And as the stock, as it's generated losses, people have bailed, causing it to go down. So when stocks get to the top of the list, it's not necessarily a good thing, especially they get to the top and come down, start going down. That means that people chased and then they're liquidating as it falls. They got trapped in something like a pyramid uh, play. And that's what GameStop was, that sort of trade. But if we look down the list, um, Coinbase is on the list. So there's been a surge of people just buying Coinbase. It must be hundreds of thousands of people have bought that stock because it's only started trading yesterday. One day it's in the top 100 list. Complete total mania. I personally have no interest in buying that. Riot's on the list. But we've gone down to the entire list. SLV is not on it. GDX is not on it. Not a single metals ETF is on the list. Not a single gold or silver stock is on the list. So by getting in these positions, I'm way ahead of the Robinhood crowd, way ahead of them. And that's where I like to be as a trader or investor, way ahead of the masses. And that doesn't mean because you appear on the list, it's instantly going to top out. Marijuana wasn't on the list, then got on the list and became a great play for 2 or 3 years. So we're not even in, at the beginning, I believe, of where this is going. In fact, the update I did yesterday, no, this morning, about commodities, I believe we're in a secular bull market in commodities that began last year in a secular bottom. We haven't even started the first 12 months of it yet. So we're basically still in year one. I think this is like 1971, and the situation is like the 70s for commodities. That inflation is only begun. It hasn't even, it's not big enough to even impact people's wallets, even though this week we found out that the CPI number came in at 2.6%, the highest annualized, the highest reading in years. And that reading is above the yield on the 10-year Treasury bond. Inflation is higher than the yield on the 10-year Treasury bond or CD that you would go buy. So people buying bonds are locking in losses, and this is why gold and silver have a bid. A lot of people knew, that this sort of thing was coming with bond investments a year ago. And big money shifted into gold and silver and helped spur that big rally that lasted into August. But this type of thinking will come into people's minds, um, you know, more as the months and the weeks and the years roll on here. But I believe it's still a great time to buy, that this is an early situation. And if I had, I came into this year with 40% of my money in bonds. As of now, as we're speaking, zero. I don't have a penny of my money in bonds. Much of it has been shifted into commodity investments, with a little bit more shifted today in a purchase I made in my main account in PSLV, or an additional purchase in this Robinhood account. I duplicated it by buying SLV. And SLV is a position that gives me more exposure to the metals trend in this Robinhood account, but it isn't highly volatile. It's only up 1.9% today. You know, if we get to 30, it's like a 25% gain. That's nice, but I'm only risking, I think, 10% on that trade. So because I'm increasing the exposure, I don't want to increase it by leverage through calls or triple ETFs or double ETFs or extremely volatile stocks. I just did it through this SLV metals ETF. Now, let's talk a little bit about cryptocurrencies, if I can, with you, because crypto is not a way to play this trend of inflation, commodities that I'm talking about. What crypto is an instrument of price speculation. And if you can time it right, good for you. And I'm not saying don't stop if you're successful at it. But what I'm saying is it's not a way to play the idea of a falling dollar or inflation or commodities. If you want to do that, you got to get involved in things truly tied to that, and that's those trends themselves. You want to bet against the dollar, short the dollar, or buy gold, because gold is the asset that's most negatively correlated to the action of the dollar historically through its entire history. In fact, the next asset that has that characteristic is the Swiss franc. Bitcoin is not an asset negatively correlated to the US dollar. Now, you may hear me say that and say, well, all the Bitcoin people are telling me that it's a great thing to buy because the dollar is going to collapse. And they're telling me to buy it because this is what they're telling me to do. So who are you to go against these Bitcoin people who are showing me these huge gains they're making and telling me these things? Well, it's not who I am or who they are. It's what reality is. And I'm going to show you what mathematical reality is when it comes to cryptocurrencies and Bitcoin and its relationship to the US dollar right now. So it's not me saying this, it's what is real. And that's what I want to show you. Bitcoin, I've just put an indicator on the bottom of this Bitcoin chart showing you its correlation with the US dollar index, the 200-day moving average, and it's got a correlation of 0.55. So it's been slightly negatively correlated over the past 200 days, but what's funny is that over the past existence of Bitcoin, the correlation has not been consistent, and there have been just as long of times as now, really looking at 6 months, that it's been positively correlated. And 0.55 is not the strongest negative correlation. What Bitcoin, we compare that to gold. And gold is historically got a -1 correlation to Bitcoin. It's temporarily moved up to 0 because over the past 6 months, gold's been in a correction and has been seemingly trading more in sync with treasury yields than the US dollar. But that's really an aberration, and it's going to likely come to an end now that we reach the point that CPI is above the level of the bond yield. We basically have negative interest rates, and that's the environment that makes gold go up and the dollar go down even more. And that's beginning as we speak. And that's why this recent gold bounce, US dollar bounce, that's brought with it a dip in gold and has caused this correlation indicator to drift up, is likely now reached an end. And it's going to return and go back down to its historical mean of like 0.95, go back for 100 years, and that's what the correlation is, consistently flatlined except for temporary aberrant periods of time. Not the story with Bitcoin. It's negative 0.55 correlation is the aberration, and there's a more consistent correlation that Bitcoin has with a different asset class that I'm going to show you. But the point is, if you want to trade against a falling dollar, that theme, the best way to do it is short the US dollar, buy foreign currencies, and buy gold itself, not Bitcoin. Bitcoin is for something else. And let me explain what that something else is, or show you what that something else is. And remember this, whenever you listen to someone on the internet talk about investing or trading or what they think is going to happen, do not listen to them and take what they say at face value. Do not just think, oh, this guy's an expert, so I'm going to believe what they say. Or this guy likes the stock market, so I'm going to believe whatever he says. Or this guy likes Bitcoin, I do too, so I'm going to believe everything I says. That leads you into trying to think that someone is this great guru and they can just predict everything. And no one can predict the future all the time. And people who present themselves that way, you got to watch out for and be aware of. And there are a lot of people like that now in the cryptocurrency world. You know, it's almost like, I'm going to predict Bitcoin's going to 1 million or 100,000. They have no idea of that. And they're trying to assert themselves as being predictors of the future, when what you need to do is listen to the reasons people give you for what they believe and see if those reasons make sense to you. That's why listening to anybody is valuable. I subscribe personally to dozens of investing periodicals. Some of them I pay for, and I do it not because I think this guy can predict everything, but because I'm interested in the reasoning that they present, so I can learn from that and see if their reasons actually change over time, or see how they react to the market. But it's the reasoning people give that I can learn from and see if it makes sense. And when you listen to multiple people, you do even better. You can combine people's ideas and become more of an independent trader or thinker that way. You can't do that by just following some person out there who's making endless predictions about things and statements that seem outrageous. They need to be grounded in facts. So this is the fact, the reality of Bitcoin is what I'm going to show you next. Here we compared Bitcoin to the US dollar, and I'm going to show you what Bitcoin has the most positive correlation with. It's actually the NASDAQ 100. It gets close to 1. I wish this would show me. Oops, we're looking at gold. I want to show you Bitcoin. It was confusing when it came up to me. Here we are. Now you can see. Boom. You see how it's close. Closest thing is 1. It's almost near. It's like the chart close to 1. The dips back down to below 0 are very temporary, and it shoots back up to 1 and stays above 1, you know, more than any other level. Bitcoin is closely correlated then to the NASDAQ 100. In other words, what Bitcoin essentially is something like a call option on the NASDAQ 100. When the NASDAQ goes up, Bitcoin goes up more. When the NASDAQ corrects, that's when you've seen Bitcoin crash. And there's no reason to think this is going to stop being its main trading characteristic as the years go by. And what does this mean? It means that as long as the NASDAQ 100 stays bullish, Bitcoin is likely to stay bullish too and go up even more. But the next time the NASDAQ 100 has another correction of 20%, expect Bitcoin to crash, because that's what Bitcoin does when the NASDAQ has a correction of 20% or greater. Bitcoin completely crashes. So it's just simply an instrument of speculation. It's like an extremely volatile stock or a call option on the US stock market. It's an instrument of pure speculation. And that's why it goes up the most when people get the most excited and speculating in the market. And we're sort of in one of those moments now where speculation is building and building and building. The stock market valuations are extremely high. We saw a little bit of weakness in the NASDAQ and a lot of popular tech stocks in March, but now we're going back up in those areas. And so does Bitcoin as a result. That's what moves Bitcoin. Bitcoin has nothing to do with the US dollar index, nothing to do with inflation. Let me demonstrate that one to you. So the CRB index is the Commodity Research Bureau index. I talked about it today in an update before the market because it's starting to rally once again. And it consists of futures contracts that are oil, energy, agriculture, the metals, not just gold and silver, but copper, palladium. It's the most broad-based commodity index, and you can see Bitcoin really has no consistent relationship to that because this just goes down and up and down and up. No real consistency. And it says fairly, there's no way you can really, trade this indicator. There's no trading pattern here that would help you time what you should do with Bitcoin. There's no real consistent relationship with Bitcoin and the Commodity Research Bureau index. What the Commodity Research Bureau index, though, tells you when inflation is here and when inflation is not. When this index goes down, commodities are falling in price. Therefore, inflation is weak or negative. When this goes up, inflation is coming or is there. So all this means Bitcoin has nothing to do with inflation. Again, what Bitcoin has something to do with is the NASDAQ 100. I've talked more about Bitcoin in this video than perhaps any other video I've done about that topic, but I'm doing it because we're at a critical moment in gold, silver, and the US dollar. And I don't want people to think they can play what's going on in those markets by buying Bitcoin. Buy Bitcoin to speculate on the S&P and gamble up. Instead of going on margin, you buy Bitcoin, or because you're good at trading it, but not to try to hedge against inflation or decline in the US dollar. So it's a fascinating time in the markets today, doubt for sure. And I'm kind of done presenting the charts. There's some questions here. I'm going to try to answer them. Someone says, Simple and Canada won't trade PSLV either. They say not enough volume. I don't know why. I really don't. I mean, there's 7 million shares were traded today. I don't know why, there's not enough volume, or I really don't understand the reason these companies are doing it. Same for SCEF. Hey, you know what the real reason might be? It could be that SLV, IAU, GLD, that these companies are bribing Robinhood and some of these brokers. That could be the real reason. That could be the real reason. I don't know why. I just can't think of any good reason, so I can only guess. But those are all the questions I see right now. I've been talking for almost 40 minutes, 40 minutes now, so probably should end the video, and we'll do another update soon. Great day for the metals market and a good day for the stock market. It's fun to see and know that this is a day when just about everyone's making money. That's good. That's a good day in the markets, I got to say. So hopefully we'll see more of them, and I'll be talking with you later.